Hello, our beloved viewers and learners. It is teacher Eria from Muna Education Services. In today's episode, I'm going to be discussing a worked out example of the preparation of a trading account. I'm going to be preparing a profit and loss account. In my previous episode, I discussed a worked out format on the preparation of a profit and loss account. Now, in this episode, I'm going to be discussing a worked out example on the preparation of a profit and loss account. This is our example. The following information relates to the books of Shoppi traders for the year ended 31st December 2025. And these are our details. So our question is, required is prepare a profit and loss account for Shoppi traders. I say it in the format, and here I re-echo it again. Before preparing any financial account or financial statement, we always begin with the name of the account, the name of the business, name of the account, and the year. So here our solution is Shoppi traders profit and loss account for the year ending 31st December 2025, and it's always written on 3 lines. The first line is for the name of the business, second line is for profit, it is the name of the account or statement, then the third line is for the period for which the account was carried out, in that period on which the account was called the year. So when we are preparing a profit and loss account, what we first post is gross profit. You draw your 4 columns here. And we have details, we have UGX, we have UGX there, our 4 columns. So what we post first is gross profit. In our example, we look for the gross profit. We had our gross profit as 700,000. So we post our gross profit in our format as 700,000. So our gross profit was 700,000. So you come and post it here. So it is gross profit 700,000. We post it in the second column. Then I said after obtaining our gross profit, as in from our example, we get it from our example. So we add supplementary incomes. I said supplementary incomes are those additional incomes the business earns. So you come and check out in our example and look for the supplementary incomes. And here we have discount allowed and discount received. Discount received and discount allowed. The meaning of discount allowed, it is that it is a business allowing the discount or giving a discount to a customer who has come. Then meaning the business is losing money to him. Let's say he has bought a commodity of, let's say, 5K, and then the business or the owners of the business say, we are going to sell it to you at 4,500, meaning the business is losing the 500. Then if you say discount received, meaning it is the business receiving the discount. Let's say our business incurred, let's say, expenses of 1 million or purchases of 1 million, and they say we are giving you a discount of, let's say, 100,000, and you pay the 900,000 instead of the 1 million. So the other business is losing the 100,000, and for you you're gaining, because you were meant to pay 1 million, but now you're paying 900,000. So you're gaining money. So discount received is any additional supplementary. So you're going to save that 100K, and that is a supplementary income too. So our discount received becomes a supplementary income, and we post it here. Discount received, in our question it was 150,000. Discount received was 150,000. Discount received was 150,000. So we come and post it here as the first discount, as our first supplementary income. We put it here. Then we continue checking out which other income do we have as supplementary in our business. You come and check it out here. We have rent income. Now, if the question comes, it is having rent income, meaning it is the business that received rent from its tenants or income as rent from its tenants. But if it's just rent, meaning it is a business meant to pay rent. So here we have rent income, meaning the business received money from its tenants. Take an example, maybe the business had some it has some buildings and always collect money from the tenants as rent. So the business received rent income as 100,000. You come and add it here also. Then you come and look for more supplementary incomes. So we have carriage outwards. That is not an income. We have commission received. Commission received is always an income because commission refers to that appreciation. It is like an appreciation fee given to a business or an individual. Let's say those people always, take an example, those people always work in mobile money and those telecommunication companies. They are paid salaries in the form of commission. The more transactions you make, the more commission you earn. So our business here earned a commission of 50k. So that is a supplementary income. You come and add it here also. It is commission received and 50,000. Then you come and check for more supplementary incomes. We have telephone charges, that is an expense. Interest received is a supplementary income because it is the business receiving interest on maybe a loan it offered to someone, that is interest received. So that is a supplementary income. You come and add it here also. So our interest received was 10,000. So you come and add it here also as 10,000. Now we have exhausted the supplementary incomes from our questions. So we add all of these supplementary incomes and get the total. So when we have gross profit as 700,000, we are looking, our aim here is looking for the gross income, and the form of getting gross income is gross profit plus or add supplementary income. So you come and add this 700 plus the totals gotten from the supplementary incomes, and it gives you 1,010,000. When you add 700,000 plus all these totals, it gives you 1,010,000. 1,010,000. That is it. So our aim is getting the net profit. So we have the gross income already here. So we say less operating expenses, and then we go back to our question and look for the expenses and look for the business expenses from our example. We check out the expenses. We say discount allowed is an expense because the business is losing money, because you're offering someone a discount and you're losing money. So discount allowed becomes an expense. So you come and add it here in our example. So operating expenses, we have discount allowed, and it was 100,000 in our question. It was 100,000. Discount allowed is 100,000 here. Then you come and check for more operating expenses. We have discount allowed, we have salaries and wages, that is an expense, meaning it is 400,000. You come and add it here also. In our question also. So we have discount allowed as an expense, then you add salaries and wages as 400,000. Then we have carriage outwards. From our question, we have carriage outwards. I said carriage outwards are those transportation costs a business incurred maybe in transporting goods of a customer. You're trying to show customer care to your customers, and then you offer them free transport, meaning you're going to incur costs in buying fuel, and it's the business incurring. So that is an expense. So carriage outwards in the question, it was 60k. So you come and also add it here. So our carriage outwards is 60,000. You also add it here. Then we also had depreciation. Allowance. Now the meaning of depreciation, depreciation means the loss of value of stock. You bought your iPhone Pro Max 4 million and you use it for 2 months. Trust me, you won't sell that phone at that same price, meaning it is going to depreciate. You bought it at 4 million but when you want to sell it after using it for some specified time, they are going to give you an amount lesser than the money you bought. So that amount that the phone has lost, meaning you bought it for, let's say you bought it at 5 million and then you sell it at 3 million, meaning the phone has depreciated by 2 million. So that value is called depreciation. So business people always put aside some expenses to cater for the depreciation of stock, or to cater for the depreciation of those fixed assets. So that is an expense already. So our depreciation allowance was only 20,000. So you also come and include it in our operating expenses here. So our depreciation allowance was 20,000. So you add all of this, then we also had telephone charges. We also had telephone charges from our examples. Like these are expenses paid for the phone calls made by, like airtime and all that made by people in the business. They say coordination always requires airtime, so businesses always incur that telephone charges by buying airtime for their employees, like for easy communication. So we post it also and we come and list it here. So telephone charges, it was 20,000. So you add 100,000 for discount allowed, then salaries and wages 400,000, then carriage out was 60,000, then depreciation allowance 20,000, then telephone charges 20,000, and get the total operating expenses as 600. Then I said the formula of the aim of preparing a profit and loss account is getting the net profit. So the problem of getting net profit equals to gross profit plus supplementary incomes, then less operating expenses. So we have our gross income plus our gross income. When you less gross income, this is 100,000 minus the total operating expenses 600,000. We get 100. We get the net profit or net loss. When the gross income is greater than the total operating expenses, we get a net profit. Then when the total operating expenses are greater than the gross income, it becomes a net loss. Now in this example, we have our gross income as 1,010,000. Then we have our total operating expenses as 600,000, meaning Shoppi traders profit and loss business made a profit, not a loss, because the gross income is greater than the total operating expenses. 1,010,000, when you less it from 600,000, you get 410,000. 1,010,000 minus 600,000, you get 410,000. That is the preparation of a profit and loss account. And in here, I said we are looking for gross profit or gross loss. Then in this instance, in this question, we got a net profit from what we have prepared. Thank you for watching and listening. It is teacher Eria from Wuna Education Services. More content is coming. Thank you for listening.